Mike Santoli joins us now from the New York Stock Exchange. Good to see you, Mike. So is the shift in sentiment in this market due all to the trade concerns?
I think trade concerns sort of pile on top of a few other issues. I think, we always expected there to be some kind of an economic slowdown, a corporate earnings slowdown this year. And the trade issue seems like, because it got re-escalated, has just exacerbated those issues. And that's why the markets have kind of gone into this defensive crouch, pricing in slower growth. The second half of this year was supposed to be when we might get a re-acceleration of the economy and corporate profits will start to grow again. Well, now the second half of this year starts in 5 or 6 weeks, so it's getting a little close to think that, in fact, we can have some sort of a pickup in that time.
I remember last summer the market became more defensive. That's where the strength all of a sudden was. Today, with this sell-off, utilities were higher. So is the market becoming more defensive and settling into that mode again?
Without a doubt, Bill. In fact, that's been going on for a while. Even when the market was, much closer to its highs and doing seemingly well on the surface, there was a little bit of a defensiveness about the leadership. It was healthcare and even big technology stocks, the ones that are these big dominant companies, not necessarily semiconductors that sell into China. They were the ones that were benefiting from this area of doubt about the overall power of the economic expansion. So I do think it's been a defensive cast. It's gotten more intense right now, especially when you look at what's going on in the bond market with those bond yields going down to, year-and-a-half lows at this point. So that's where we are. I think the market is being held up by low bond yields that feed into those safer sectors. Question is how long that can last.
Now, in simple terms, you look at a lot of different charts during the day, Mike. Are some of the chart patterns in the Dow Jones Industrial Average and the S&P 500 mirroring what we're seeing in terms of market action?
They are, for the most part. I mean, for one thing, I think we should maybe emphasize that if you dial back a couple of years, the stock market has really been in a sideways range, swinging around for about a year and a half. I mean, since January of 2018. Yes, we made a new high just last month. The decline has not yet really jeopardized the most recent uptrend from December just yet, but it's getting to this area, for example, in the S&P 500, where if it fell a few more percent from here, I do think you're going to have people question whether we're just back into kind of a more sloppy environment that's going to chop around and no longer really in a defined uptrend.
Mike, thank you so much.
Okay, thanks.
Mike Santoli from the New York Stock Exchange.